Hello, and welcome to another stock analysis on Stock Market Palantir. Don't forget to subscribe and drop your comments. Now, let's go hear our analysts.
Welcome to the Stock Market Palantir. Today, we are going to talk about ZDG. ZDGE, Inc. is, well, it's a fascinating and, frankly, often frustrating microcap company that's going through a profound corporate transformation right now. For years, most people knew it for its legacy business, ringtones, wallpapers, but now it is aggressively pivoting to capitalize on the generative AI value chain. And it's doing that through its specialized unit, dataseeds.ai.
And that pivot has generated some of the most, truly violent price action we've seen in the microcap space recently. When we talk about ZDG, we really have to start with this tale of two quarters. After the Q4 FY 2025 earnings in October, the stock just cratered, a massive 24% crash. Then, just 2 months later, the Q1 results come out and trigger this immediate, euphoric 28% intraday surge.
Yeah, and that December surge wasn't just a minor blip. It came with what you can only describe as super normal volume. We're talking trading volume 948 times its average. So the central question for us and for investors is this. Does that recent explosion confirm ZDGE as a newly profitable, validated AI growth multiple story? Or is the underlying market structure and, the persistent execution risk still classifying it as a highly speculative asset?
And I believe that while the progress in Q1 was notable, the volatility in these structural risks, they remain dominant. I approach ZDG as a high-risk gamble that's being driven by momentum, not by a sustained fundamental strength.
And I'm going to argue that the evidence we got in that Q1 report proves the turnaround isn't just possible, but that it's fundamentally validated, signaling a new and much higher baseline for this company's valuation. My core thesis, it really centers on that Q1 FY 2026 earnings report from December 2025. I think that quarter was a watershed moment. It really transitioned the narrative away from ZDGE being a distressed asset. It was what we call a triple beat against the consensus bearish thesis that was established back in October.
A triple B, right. For those who aren't familiar, that means they surpassed expectations on revenue, GAAP EPS, and non-GAAP EPS. But let's hear the specifics.
Exactly. So first, the return to profitability. GAAP net income hit $0.8 million, which translated to a non-GAAP EPS of 7 cents. Second, you saw a concrete revenue inflection, $7.6 million, which marked their first quarter of year-over-year growth in some time, up 5.8%. But the most critical piece of evidence, the one that really changes the future valuation model, is the dataseeds validation.
The order increase.
Precisely. Management confirmed a second order from an existing and very crucial AI customer. And the dollar value of that order was, it was 25 times larger than the initial one. This moves dataseeds from a concept, from an idea, into a verified, scalable, high-margin revenue stream. This fundamentally re-rates the company. And on top of that, management's behavior showed genuine shareholder discipline. They actively repurchased about 240,000 shares during this period of high volatility. That shows real conviction in their own valuation. Plus, they started a quarterly cash dividend of about 1.6 cents per share back in October. Look, companies that are dealing with existential distress do not start paying dividends. They're signaling confidence.
I see the confidence, I do, but I'm sorry, I just don't buy that the recent volatility implies a solid fundamental shift. Not yet. Q1 was strong, I'll grant you that, but the stock remains bifurcated. The price action, it just feels like momentum chasing this AI lottery ticket, and it's being amplified by the market structure rather than pure, sustainable earnings power. Let's talk about the anchor.
You mean Guru Shots?
I do. The Guru Shots acquisition continues to act as a significant anchor, consuming capital and, masking the true profitability of the core ZDGE app and these new AI initiatives. Guru Shots revenue declined 27.3% in Q1 FY 2026 alone. Now, you mentioned the excellent performance and high-margin subscription growth, and yes, it did hit 1.1 million active subscribers, but that decay at Guru Shots makes the overall revenue growth highly uneven. And it's heavily reliant on some aggressive cost-cutting to produce that GAAP net income. And if we really look at the mechanism of that 28% surge in December, the explanation is less about some mass institutional re-rating and more about market structure risk. ZDG is a classic low-float stock.
Okay, so help our listeners understand what that means, in practical terms for the price action.
A low-float stock, right? It just means there's a very small amount of freely tradable shares available to the public. In this case, around 10 million shares. So think of the market like a pool of water. When you have a deep institutional pool, it takes a massive influx of buying pressure to move the price even slightly. In a low-float stock, well, the pool is very shallow. So after that October crash, you had massive seller exhaustion. When that positive Q1 news hit, a relatively small amount of buying volume had to pay up aggressively just to find sellers. That creates huge slippage and instability. That violence, yes, it's the market correcting a mispricing, but it's doing it in the most unstable way possible. This lack of institutional depth is a huge structural risk.
I agree that the low float mechanics amplify volatility, of course, but it's important to clarify the driver. I maintain the price surge was driven by organic, long-only demand reacting to the fundamental return to profit and that critical 25x data seeds order. The tight float simply accelerated the correction of a massive mispricing from October, when the market was only focused on the guru shots drag.
I have to challenge that interpretation. Let's look at the short interest data, because it's highly instructive here. Short interest on ZDG is exceptionally low. It's around 0.1% of the float. That means the days to cover is just 0.19 days.
So there is effectively zero structural short pressure.
Precisely. Therefore, that plus 28% move was demonstrably not a short squeeze, which is what often drives these kinds of massive spikes. It was pure long buying momentum, amplified by the low float mechanic hitting a seller vacuum. The implication is, I think, profound. The stock lacks that protective layer of institutional stability. It is highly vulnerable to adverse news because there isn't a deep bench of long-term holders ready to step in when the news turns sour. And on that topic of market vulnerability, the stock's low nominal price often makes retail confusion even worse. We see queries generated all the time about previous reverse splits. This repeated confusion, it isn't just noise. It's a sign of psychological fragility within the investor base and a real misunderstanding of the corporate history. It often gets conflated with other, truly distressed microcaps.
And that's a crucial point. I'm glad you brought it up because this is why forensic analysis is indispensable here. We need to provide clarity to combat those psychological barriers. I can state definitively, ZEDGE has never executed a reverse stock split since becoming an independent public company.
Walk us through where that confusion comes from then, because it clearly muddies the waters for new investors.
Absolutely. The confusion stems from the 2016 spinoff from IDT Corporation, its parent company. That transaction used a 1-for-3 distribution ratio. This was not a consolidation born of financial distress, which is, what a reverse split signals. It was a mechanism of value creation where IDT shareholders got one new ZED share for every 3 shares they held in the parent. It was an issuance and a distribution, not a devaluation and a consolidation. Furthermore, that existing $3.8 million share repurchase authorization isn't just some theoretical figure. It provides a clear quantitative valuation floor, and it demonstrates management's anti-dilutive discipline. They are actively using capital to offset stock-based compensation, which is a very strong signal that management believes the stock is undervalued at current prices.
Okay, the commitment to share repurchases and the dividend, those are definitely positive signals of capital structure discipline. I'll concede that. However, discipline doesn't equal strategic reliability. You highlighted this asymmetrical opportunity in data seeds, but we need to discuss whether data seeds can possibly scale fast enough to overcome the continuous strategic drag that's being imposed by guru shots.
I see the immediate burden of guru shots. I do. But let's focus on the long-term competitive moat that DataSeeds is building. The success of DataSeeds.ai is tied to licensing ethically sourced and rights-cleared data for AI training. This addresses a massive pain point in the generative AI industry right now.
Can you explain the significance of ethically sourced data in this context? Why is that so valuable?
Well, current large-scale AI models are often trained on these massive scraped web datasets. And much of that data is now facing serious, multi-billion-dollar copyright litigation from artists, authors, and other rights holders. The industry desperately needs legally safe data sets that are rights cleared where the provenance is assured. ZDGE's personalization platform has high user engagement and proprietary content rights, and that allows them to curate this data stream legally and ethically. That 25x order increase proves this data is not only valued, but is highly scalable because it solves an existential legal problem for major AI players. This unit, along with the launch of the Tape Deck music marketplace, it represents an asymmetric bet on future valuation based on high-margin, unique intellectual property.
I agree entirely that the market needs rights-cleared data, and the exponential growth from a low base in data seeds is compelling. But let's just quantify the tangible burden of the declining Guru Shots unit. Its revenue collapsed 39% in Q4 of 25, and it continued to shrink by 27% in Q1. That asset consumes management attention, it consumes capital, and every single dollar it loses just dilutes the impact of that high-margin AI growth. So the risk is simply one of time. Can data seeds scale rapidly enough to compensate for this persistent margin drag? And compounding this is the operational risk, particularly the geopolitical exposure through the Israeli-based Guru Shots team, which adds another layer of instability to an already volatile asset.
It's a race, absolutely. But the fact that they have achieved profitability, despite the Guru Shots drag, shows that the core ZDGE business and data seeds are already robust enough to carry that weight. The narrative is shifting from ZDGE needs to be saved from Guru Shots to ZDGE is generating significant new value while it slowly divests or stabilizes Guru Shots. At the end of the day, the Q1 FY 2026 results established a new higher baseline for ZDGE. The company has validated its ability to monetize via subscriptions, and crucially, it has verified a high-growth AI revenue stream that addresses a critical industry pain point. Despite the inherent volatility of the microcap space, the market is finally starting to price ZDGE as a profitable, growing AI-enabled business, and that reflects a permanent shift in its identity.
But I must insist on the caveat that the volatility is a feature, not a bug of this thinly traded equity. While the AI pivot offers fantastic potential, investors relying on this outcome have to acknowledge the reliance on, volatile execution, like the urgent need to stabilize Guru Shots, and the market structure characterized by that low float and momentum chasing. This means ZDGE remains a highly speculative play, where rapid gains can and will be erased just as quickly if operational hiccups occur.
Where we certainly agree is that this corporate transformation is far from complete. Future performance is going to hinge entirely on the ability of data seeds to scale and become a primary revenue driver. That's really the only mechanism that will move this stock definitively beyond its existing microcap volatility and into the realm of sustained institutional interest.
Agreed. It's a compelling, high-stakes watch.
We analyze ZDGE's recent massive price swings, examining the conflicting narratives of its AI-driven turnaround, specifically data seeds and its promise of ethically sourced data, versus the ongoing drag from its acquired assets like Guru Shots and the inherent instability of its low-float market structure. Thank you very much for hearing us. Let us know in the comments what is your opinion and if you want us to analyze other stocks. Don't forget to subscribe to the Stock Market Palantir channel to catch up with more stock insights, and see you in the next video.